Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Elmer Stewart, the President and CEO of Copper Fox Metals, which trades on the TSXV under the symbol CUU. We currently cover Copper Fox with research and have a buy rating and 50-cent per share target price on the company. Elmer, great to have you here today.
It's a pleasure to be here.
So with that said, I'm going to leave it to you to walk through the Copper Fox story top to bottom with this presentation. I'll hop in if there's any questions along the way, and then we can get into some Q&A after that.
Okay, thanks, Ben. Yes, I've got a presentation here for the company, so I'll just start, and I intend to go through it quickly, so hopefully it'll generate a bunch of questions.
Perfect.
Copper Fox, a little bit of information on it. Our flagship project is the Van Dyke property, and the other four photographs show the various properties we have in North America. This is our forward-looking statement. I would encourage all readers to please review it very carefully. A little bit about the capital structure, the management group, myself, Mark, and Lynn. A little bit about the capital structure, the ownership, and how the company has been structured over since possibly 2009 when there was a change in the company. And along the bottom, you'll see a listing of the various directors of the company. Copper outlook. I believe the copper space, we're in a terrific area right now. I think the price of copper is going to go up. In addition to some of the factors that we've listed here, there are like supply disruptions are certainly playing a major role right now. The people are talking about the increase in population worldwide. They're talking about copper need for semiconductor chips just to add to the issues that we've listed here. So overall, like I said earlier, I think the copper space is a great place to be right now, especially now and in the future going forward. A little bit of overview, and we're focused in North America. We're focused on large, low-cost, long-life porphyry copper projects. We have a very favorable joint venture with Teck Resources on Schaft Creek, which we'll talk about a little later on in the presentation. We have two projects that have gone through the preliminary economic assessment stage, and the combined value of those, NPV value of those two to Copper Fox, is about $855 million US. Both Schaft Creek and the Van Dyke project are now transitioning or trying to be advanced through to the preliminary feasibility stage, which is a very critical milestone in project development. In addition to that, we those two projects, 3 of our 5 projects are at the mineral resource stage, and each one of those has significant upside potential. Over the last few years, we've been able to assemble quite a metal balance, and we've listed at about 5.3 billion pounds of copper. In addition to that, we have approximately 2.5 million ounces of gold, 22 million ounces of silver, and about 190 million pounds of molybdenum in addition to the copper. So when you convert it to copper equivalency, we're about 7.4 billion pounds of copper equivalent, which is quite a nice metal balance sheet. 2 projects in Arizona, they're getting ready to at the drill ready stage, and we have a very strong ESG philosophy toward project development. The slide really shows you a little bit of an overview of where all our projects are located. We're located in Tier 1 porphyry copper districts in Canada and in Arizona, and it gives you a little bit more color on the resources for the Eaglehead, the Schaft Creek, and the Van Dyke project, both on the measured and indicated categories and the inferred category, resource categories. Schaft Creek Joint Venture, it's operated by Teck Resources. They have 75%, we have 25%. I'll discuss it a little bit later on. It covers one of the largest undeveloped porphyry copper systems in North America. There is a PEA done in 2021, which we'll discuss a little bit later on. Huge resource expansion potential, readily available infrastructure, and we have a budget of about $16 million for 2025 work. And the focus of that work is to advance the project to the preliminary feasibility stage. In 2021 to 2024, after the PEA was announced, the focus was on metallurgical recovery and understanding the metallurgy better across the deposit, testing the variability. And 2023 and 2024, the focus was geotechnical on pit slope stability measurements. And that work now has been completed. And what we got for that, we got a lot more information, and hopefully with the reports that are coming out from the 2024 work, we'll be able to announce shortly some of the results of that. Schaft Creek program showed some of the work that was completed in Schaft Creek. There was a lot of work done. We spent about $24.6 million. Right now, Teck is probably close to, at the end of December 2024, they were close to $98 million complete capital investment into the project. But one thing I want to point out here is that, again, with the drilling, its geotechnical nature was not meant to be looking for mineralization. Again, we had intersected a very significant intersection at the north end of the pit. It's outside the pit wall, but it just shows you the resource expansion potential of the project. And one thing I point out here, this is a very close to surface intersection, which is very helpful when you're looking at open pit systems. Here's the program for 2025. Again, ongoing completion of the geomet work, complete the geotech pit slope stability work, and the focus is on two of the critical parameters of the project, which has not been investigated by the joint venture to date. That's the waste storage facility and the tailings facility. And hopefully by the end of the 2025 field season, we'll have enough information for Teck to make a decision as to whether the project should advance to the preliminary feasibility stage. Here is the most interesting thing about Schaft Creek. We've always known the project was very sensitive to metal pricing, and what we've tried to do here is show you the difference between what the 2012 SS feasibility study showed, what the 2021 feasibility showed, and from an operating standpoint, you can see the benefit of a major copper producer taking a project on and looking at it from an operational standpoint. So you can see the changes on this slide. The bottom part of the slide is more along the lines of the economic output. But what's important here is we should use the three metals that actually contribute the most to the revenue. Starting with copper, we started with the base case of $3.25, gold base case $1,500, molybdenum base case $10, and that's what was used in the 2021 PEA. But what we did was trying to show the reader the sensitivity of what happens if the price of copper goes up by 25 cents a pound. So in the EBITDA, you can see the effect there. You can see the effects of increased cash flow, and also you can see the effect on the after-tax valuation for all three metals. So if you take a base case of $842 million in 2021, and right now we're using $4.25 for long-term copper prices. We are using $2,200 an ounce for gold prices. We're using $23 a pound for molybdenum, and silver prices we're now using $26 an ounce as opposed to $20. But clearly you can see based on the metal increase in metal values alone, that would imply the value of Schaft Creek has increased substantially since 2021.
Yep.
So here is a breakdown of the joint venture, and the reason I say it's one of the best joint ventures I think a junior could be in. Technically, when you look at it, we can't get diluted out below our 25% until we reach production. And Copper Fox is not required to put any cash into the joint venture. Teck puts up all the money. So from a junior's perspective, a great joint venture to be involved in. Let's go to Arizona. This is our Van Dyke. It's an in-situ copper recovery project. These things are scalable. They're environmentally friendly. Again, we did a PEA in 2021 with very good economics. It's a potential mid-tier copper producer, 85 million pounds, good infrastructure, and we're looking at advancing that project to the preliminary feasibility stage as well. This is a little bit what it looks like. These are some of the advantages you see in ISCR. You probably heard quite a bit about it, but it's a completely different approach to copper production than what you typically see in the standard underground mine and or the open pit mine. Again, you show how simple it is on the little diagram on the left-hand side bottom. And what we're doing here is we're trying to leach the copper out of those little veins which are shown in the circle. We don't mine any rock, we just leach the copper out of the veins, and they sit in a naturally occurring fracture system. And it also shows how we propose to put the well field in as well. And I'll show you that later on as we walk through this presentation. Here's the activities for 2025 activities, and this is what we're doing. These things are ongoing. We will be reporting these results as results come in. We like to do a news release on technical matters, and so as these come in, we'll be pushing those forward. This is our stakeholder and our technical support team. A while ago, we announced we put together a very highly qualified group of engineering firms, all with first-hand experience in situ copper recovery projects in Arizona. And we're putting together what we call an execution plan, and that execution plan sets out the scope and scale and the studies that needed to be completed and the estimated cost of those for Copper Fox to make a decision to take the project into the pre-feasibility stage. So, and then the other stakeholders we have at Copper Fox as well around the Van Dyke project. Again, the same kind of a slide as we've shown for Schaft Creek, 2015 PEA, 2020 PEA. You can see the technical parameters have changed. You can see the financial parameters change. And the only thing that really changed in this project from 2015 is we increased the metal price from $3 to $3.15 a pound. Again, we show the sensitivities at $3.15 a pound and what happens if you increase it by 25 cents per pound or decrease it, and clearly it shows you the effect. Again, the project is exceptionally sensitive to metal prices, and I will reiterate that we are using $4.25 a pound now copper for a long-term pricing for copper. Clearly, implied value has gone up considerably at Van Dyke, and that little slide in the bottom of it just basically shows you the distribution of how the mineralization is hosted along fractures in the in the core. This is a resource statement, and this is done at a 90% estimated 90% recovery. And we focus here mostly always on the soluble copper, not the total copper, because we're only going to be recovering soluble copper. Gives you a little bit of an idea what the surface looks like, where the shape of the mineralized zone, and one of these late stage faults that has just dismembered a little bit of the deposit at the north end. And this shows you the distribution of the shapes. Clearly, the plan view is, on that we show two lines. One is a blue line, and that's our phase one. And the reason we're using that as phase one is because we're going after the high grade in phase one. And there's a number of economic reasons to do that, primarily to recover your capital investment. And phase two is year 8 to 17, and that is the lower grade portion of the deposit. And one of the key things about this project is that we plan to tackle it underground. So here's a little picture of what our land holdings are. And in the work we did in 2020 for the resource estimate, we've identified a very large exploration target to the south of the deposit. We know the deposit is open to the southwest, and we believe this area shown on this slide has potential to probably double the size of the deposit, assuming drilling success going forward. A little bit of view on the copper mineralization we see there. Again, you can see most of the mineralization is all fracture controlled, and that's what we're trying to do, is recover the copper from those fractures, not mine the rock. This is a little bit of a geological model, very simple geology for Van Dyke. All the mineralization is contained in the Pinel schist. There's a leach cap sitting of clay sitting on top of it. A few laramide H dikes penetrated, and so from a in situ copper recovery standpoint, a very, very good geological setup. The underground, like I said earlier, we plan to do it underground, and that way we're going to be avoiding any of the aquifers we know in the area. And we think it's probably not the cheapest way to go, but overall we assessed it as probably the best way to extract the copper from the Van Dyke project. This is the well field layout. It will be done from a bunch of galleries and drilling stations underground. Again, in blue, phase one; in red, phase two, and it just shows you the distribution of how the well fields will be inclined to do that. And so, as we go forward, we will do further studies on the feasibility of doing it this way. So far, all the work we've done so far suggests technically it should be feasible. This is a little bit of the socio-economic benefit, and now Van Dyke is located in the Miami Globe mining district and primarily under the town of Miami. It's a project with 17-year mine life, 21-year extension, and we think it could go further than that. But as you can see here, there's a significant impact into the greater Miami area, based on if the mine was to go forward. A little slide there showing the mineralization from the 1,300-foot level of the Miami mine, and then a little bit of an idea what the topography looks like in and around the deposit. Let's go on to our advanced exploration stage project. This is Eagle Head, northern British Columbia. We bought the project in 2021. We did a resource assessment in 2023. And if you look at here combined, you can see the metal grades. We've used a $5.50 NSR cutoff for it, which seems to be good. This work was done by an independent engineering firm. We didn't have any input on the selectivity of that. But what we really like about the Eagle Head, there's a one-to-one correlation with the chargeability and with the mineralization, and you can see that there. So clearly a large portion of that target has not been drilled off yet, and we actually believe the east zone and the bornite zone are one large zone. And the reason we say that is the chargeability go through it, but within that 500-meter gap, there's been no diamond drill holes put into it, and excellent metal recoveries, and we have an exploration permits, good standing. This is our Sombrero Butte project. It's a laramide edge project. We share a boundary with the Faraday Copper. We've shown Faraday's project outline pit for 2023 based on their most recent resource assessment. We show you the target that we have been developing over the last couple of years here, and so we're getting ready to hopefully put some pins in the map where we might want to drill some holes, and then file a plan of operation with the regulators to see what's required to get the plan approved. And lastly, here's our Mineral Mountain project. Again, it's laramide age. It's a very, very compelling target, and we've got 3 larger areas on the property which are higher chargeability. We are in the final processes, we hope, of getting a permit from the government of the federal government there in the United States to drill target number 1 and target number 2. And hopefully that work can get going here within the next month to a month and a half, and that'll primarily depend on the BLM. But we've gone through the the plan of operation has been approved. We're working on the bond, and then finally the last issues would be what are going to be the requirements of the permit, and we will be more than happy to comply with whatever they've asked us to do. So we're looking forward to that drilling program. Could have a big impact on the Copper Fox, the company, because if we're successful, then this would probably be the first major laramide age discovery in the last 30 to 40 years in Arizona. And with that said, that is essentially a very brief overview of Copper Fox, the company, and anybody who would be interested in taking a look at it, I suggest you go to our website, because each one of our projects has a very detailed technical presentation on our website under each project, each one of the various projects, and that'll provide you a lot more information than what I was able to provide here today. So Ben, back to you.
Yeah, well, I appreciate that, Elmer, and it's not an easy task for you to go through all projects that quickly. You could probably spend half an hour talking about each. And so getting into some questions, you did answer many of mine, but I thought maybe to start off, you've got 5 projects, all of which could likely, have a company in and of themselves as a single asset. Can you talk about this sort of multi-asset approach with Copper Fox, why the strategy of developing all 5 of these projects at the same time, and how your sort of vision of the company is going forward?
Well, the vision of the company going forward, we want to build out a viable copper, sort of like an advanced stage copper generating company. Our strategy is not to go into production. And if you look at it, I've been in the industry now for 49 years. I was able to convince the board that instead of having just an interest in Schaft Creek, we should build the company out, because if for whatever reason Schaft Creek would not go ahead, and right now it sure looks like it could go to the next stage, I'd like to have a fallback plan. I also like to be in Tier 1 jurisdictions where the rule of law applies. And one of the other things is simply this: if you're able to, a junior company, and you have a strategy like Copper Fox, if you're able to identify and build up projects with resources, they may not be of interest now. They will be of interest down the road, primarily because as you're probably aware, a lot of companies are saying we have a very low inventory of exploration and or development stage projects. So if you're able to get your hands on a resource, a near surface resource that has got the potential to be quite large, which we believe based on what we know at Eagle Head, we believe it has potential to get a lot larger than what our resource statement is. The holding costs we've put together are very minimal overall to keep all these claims in good standing. Now, Schaft Creek, as I said, that's a responsibility of Teck, and it is already a multi-billion ton deposit, and we don't really know how big it is. So that's our strategy. As you know, if you can get your hands on a resource and you like the resource, and if you do an internal investigation and say, I think that resource could be worth a lot of money in the future, that's part and parcel as to why we operate in our strategy.
Yeah. Yeah. Well, no, it certainly makes sense, especially from a hedging against risk perspective. Like you said, if Schaft Creek, for whatever reason, didn't move forward, you've
Mhm.
got four other projects to fall back on.
Or the
Um,
same thing for Van Dyke, or
exactly.
same thing for Eagle Head. No,
And the company doesn't blow itself up like that. So no, makes a lot of sense. Keeping it general before we get into a couple of the assets, maybe you can talk about the team and how lean it is, the strategy around that, and then I understand you rely a lot on your board and strategic advisors to sort of fill the holes from the management team. Maybe you can talk about that for a second.
yes, you know, the way we operate here in Copper Fox, internally we do all the surface geology work ourselves. I don't like talking about projects unless I've been on the property and I think I have a good understanding of them. But what we've done, we've built out a network of very qualified engineering firms and private individual consultants in areas like metallurgy or mining engineering or environmental sciences. And the reason we do that is we use consultants as opposed to having them internally, is that we can't keep them busy all year long. And it's better to keep your G&A costs down. That allows us to put more dollars physically into the ground and either exploring and or advancing those projects. And yes, I do rely quite a bit on the board, and we have a very good network of go-to consultants when we have specific questions. But as I said, we do most of the work, all the work, the geological work internal, and we like doing it that way. We feel comfortable, much more comfortable advancing projects that way.
Yeah. Yeah. Makes sense. And again, keeping G&A to a minimum is, critical for companies in the exploration and development side of things. So moving into Schaft Creek, and I know there's a whole bunch of different things that we can talk about, but I thought I would have you highlight again and discuss the joint venture a little bit and how beneficial it is to Copper Fox. Of course, partnerships with big companies, a lot of the time they can dilute the partner down, in this case, Copper Fox, but with this JV, that's not the case. So maybe you can expand on that a little bit.
Yeah, we signed the joint venture in 2013, and in essence, it provides for a number of cash payments, and which are set out in the slide. But to drill it down is like one of the things I found, and a few of the people I've known in the industry, they try to participate. And we approach that JV saying, we don't have the financial wherewithal to participate this on a dollar for dollar basis. So we negotiated a transaction with Teck, and they were really good to negotiate with, really good. And I found them to be excellent partners. Is that, essentially what it is right now we have a 25% undilutable interest until production is reached at Schaft Creek. Now, Teck is responsible for putting up all the funding to that point in time. We're not required to put any cash in, and there are two cash payments that are future milestone cash payments based on one, the decision to put the project into production. And the second one, the milestone, the trigger point in that is completion of construction of the processing facilities. And the way it works now is the first 60 million is to be paid by Teck solely on their behalf. And the next, I believe it would have to be the next $80 million of payments. That would reduce our third milestone payment to zero. And then the next 80 million on top of that would reduce our next milestone payment to zero. So at that time, Teck would have invested $220 million into the project. And I believe it would be fair to say if they've invested that kind of money in the project, they have a very strong feeling that the project is more than likely going to go into production. Can't guarantee it, but that's essentially the way it works. And the one call that Teck does have on the project is the ROFO. If we want to sell our interest in Schaft Creek, we have to approach Teck first, setting out what we want for it. Copper Fox can do that at any point in time. And so right now we're letting Teck advance the project because they are quite capable of doing this. And so the idea is to let them continue to advance the project. Hopefully we'll get to the preliminary feasibility stage this year. No guarantee. But if they meet that milestone, it is a significant milestone in project development. So yeah, so we're in a position where we don't have to put any cash. We cannot get diluted until we reach production, and we have the benefit of a senior operator advancing the project on our behalf.
Yeah, yeah, and that sort of brings me to some of these junior developers that have projects of this size and own 100% of it. They don't have the access to capital to be able to develop it themselves, and so this partnership can, work in your benefit for sure. And so with that, just again, maybe you can talk about, and I know in your presentation you don't necessarily talk about the actual full size of the project because you don't own 100% of it, but maybe just for the viewer, you can mention the size of the resource at Schaft Creek in total so that they can get an idea that this project is legitimate and large enough for an operator like Teck to develop it.
Yeah, in the measured and indicated categories, I think the contained tons are over 1.3 billion tons, and in the inferred category, it's probably close to 350, 400 million tons. But in the presentation, I talked about that drill hole that was intersected in 2024. That was a 250-meter step out to the north, a very significant step out with a very significant higher grade, much higher grade than the life of mine average grade, and very near surface. So that shows you the exploration potential to add more to the resource. But one thing I will say is that in 2021, when we did the preliminary economic assessment and with the help of Teck, we only used 60% of the resource that was identified in the mineral resource estimate. And so using 60%, the other 40% essentially is in the pit walls.
Right.
So clearly you can see the potential longevity of that project should it go into production.
Yep. Yep. And again, in your deck and even in our research on you guys, we talk about the sensitivity to the metal prices. There's a lot of upside using closer to spot prices than what's depicted in that report. And just to close out Schaft Creek, advancing to the PFS, what can investors look out and keep on their radar for that? Is that a 2025, 2026 thing that you're expecting? What is the timeline there?
Well, those decisions will be made primarily by Teck Resources, but I will say we have a very open relationship with Teck, and we do talk to them quite a bit. What we look forward to is, one, the results of the geotechnical report from 2023-2024, which hopefully will be out soon. The second one will be the report on the geometallurgical domaining of the property. And so because it's such a vast deposit, the variability changes. So the Teck did a lot of work on that, and hopefully that report will be coming out soon as well. And the whole essence of that was not only to understand the variability, but also to attempt to increase the metal recoveries, increase the copper recovery, increase the gold recovery, increase the molybdenum recovery. So those two things. And then toward the end of the year, Teck will look at all the various aspects, and then they'll go through an internal process to determine if the project is ready to transition into the preliminary feasibility stage. And Copper Fox will be part of those discussions as well.
Great. So a few things to look out for. So then pivoting over to Van Dyke, in situ copper recovery is obviously something that is not the most common form of copper mining. Maybe you can explain that process just a little bit in more detail, and then also how it relates to the Van Dyke project itself and what makes it a good candidate for this type of metal extraction.
Yeah. In situ recovery is exactly what it said. You're recovering the metal in situ, which means you're not mining the rock, which means, it's a completely different approach. And they use less water, they generate substantially less greenhouse gases. The disturbance is minimal compared to what you would normally see in an open pit. But the thing is, for the majors, maybe not so much, but the intermediate companies, 80 to 85 million pounds, maybe if you could really do it, you could get 90 million pounds of copper. That's like 45 kilotons of copper per year. For them would be the attraction of being able to incrementally add to their balance sheet very, very cheap copper, especially if you were able to bring it into an existing operation in relative proximity. For the social aspect of it, you don't see any big open pits, no dust, very, very minimal impact, but they generate a lot of economic benefit into the communities, and they usually can have 20, 25 years of mine life, depending on the resource. And so it's they're not going to be really large, but they are certainly of interest to a certain mid and the super junior type copper producers.
Yeah. Well, and I think in addition to that, and I don't, maybe you can fill the number in for me, but the capital required to get this started, the capex is relatively low for a project of this size comparatively to a large open pit copper project.
Yeah, that's right. I neglected to mention that during the presentation. And if I was looking at Van Dyke, I'm looking at an all-in capital cost of about $300 million. That would include about a 28 to 29% contingency on top of it, included in the 300 million. If you're looking at Schaft Creek, you're looking at $2.6 billion, the latest estimate, and that would include a 28% contingency on top of it. So if you look at it, it's like an 8 to 1. And so that's why they're could be quite attractive to a mid-tier copper producer.
Yeah, well, absolutely, and it works with you guys quite well as you've got the big partner on the high capital project like Schaft
Mhm.
Creek, and then something that's achievable from a financing standpoint for you
Mhm.
with Van Dyke. Um, Great. And then just the last sort of question that I always like to ask is from well, actually staying on Van Dyke quickly before I go to this is just catalysts that are coming. Again, you're looking to progress to the PFS. What do you need to do to get to that stage and make that decision? What's sort of coming in the pipeline for the project?
Okay. What's coming right now? We're waiting for the completion of the execution plan, and that was being managed by Stantec out of Chandler, Arizona. All the groups that we've retained, all of which have hands-on experience, are putting their input into the execution plan. That execution plan, as I said, will pretty much lay out the path and the estimated cost to go to the preliminary feasibility stage. That project, once we receive that, we will be announcing what that is. And then clearly we will be going to we'll announce the execution plan. I'll take it to the board, and then the board will decide what would be the next steps at Van Dyke. Are we going to advance this to the preliminary feasibility stage? What are we going to do? If we do, what parts are we going to tackle first? So that would be probably the biggest news that would be coming out of Van Dyke.
Great. Great. And then so to cap it off in terms of catalysts beyond Schaft Creek and Van Dyke, what can investors look out for? And then that's all I've got for questions.
Okay. I think the big one will be obviously the drilling program at Mineral Mountain. If we are successful there, and I will say that is a exceptionally compelling target, from the style of mineralization, the alteration, the geophysics, the rock type, everything you're looking for in a laramide age porphyry copper system is on that property. And we've done a lot of modeling. We think the mineralization there is very similar to what they have in the Safford district, which is in southeast Arizona. for a number of reasons. And so if we are successful there, like I said, that'll be the first major Laramide age porphyry copper discovery in probably the last 40 years in Arizona. So that will be, if we are successful, I think that'll be a major catalyst for Copper Fox.
Great. And then at the other two projects, is there anything going on there?
Yes, Eagle Head, we plan to do a geophysical program because at what we've identified there's a mineralized corridor. It's about 8 kilometers long by about 3 kilometers wide. And the geophysical work we're doing this year will complete the geophysical coverage of that corridor. One thing we did find out in 2023, the mineralization is open down dip. It appears to be open across strike and certainly open along strike. And the reason it's open is because of the historical drilling that was done in the past. So our plan is to tie it all together, take all the geophysical surveys, put them together in one reinterpreted geophysical program. And we think that's going to be a very efficient for future drilling programs to go forward at Eagle Head. And for Sombrero Butte, we're just finishing putting the touches on what we call an updated exploration model. That will be followed by filing a plan of operation. Clearly, we'll be announcing that with either the BLM and or the Arizona State Land Department, because the project there is made up of two types of claims. BLM claims Arizona exploration permits. If we drill on the permits, we have to deal with Arizona. If we drill on the BLM land, we got to deal with the federal guys. So yeah, that'll be announced as well. But would probably be the next thing is coming on Sombrero Butte.
Okay, great. Well, Elmer, I appreciate the time walking us through the presentation and obviously answering my questions as well. Certainly looking forward to the rest of 2025 and the news you'll be reporting throughout. Quite an exciting time ahead. The best of luck as well for our followers and our viewers. If you haven't seen our research on Copper Fox, you can find it all on our website at atriumresearch.ca, and we'll be writing on the news flow that's to come. And again, Elmer, thanks for your time today.
Oh, it's a pleasure being here.